Good evening everyone and welcome to session recap 28th of November 2016. My name is Nenad and today we will see Euro dollar, pound dollar, Australian dollar, pound yen and Euro yen. So previous week was also excellent. I mean, I don't know how long this streak will actually continue to run for, because very often we at least need to see some losses. I mean, it's normal in trading, but really last couple of weeks we haven't had even a single loss on our session recap trade setups, and this is really good market. Now market is listening to us, and I really like to trade the market at this point. So previous week was as I said very good, and it gave us 580 pips total pool. And let's see if this week we will actually get at least 10 or 20% from the market. But I hope that we will continue to get so many pips as we have been doing this for the last couple of weeks. I mean, every single of these session recaps was very good, but especially last two, more than 500 pips on the table. So before I begin, as always, standard disclaimer explaining that online education materials are developed by Admiral Markets Estonia for a global audience, so take into consideration that this is for informational purposes only. By accepting the risk disclaimer, you're also proceeding further with me. So today we will see, of course, what happened during previous week, but also before we start with that, first let me explain rules and setups, how we actually take trades and how do we take any of these setups on our session recap. First of all, you need to give price a breathing room, and you enter within 15 pips of the predicted level if it's in agreement with your system. I call this POC or buffer zone. Always use scaling in if you wish, because you do your own trade and money management. You need to respect your stop loss, and you need to add a spread to your stop loss, even if you trade via ECN at 2 to 5 pips depending on the pair traded. We take only one position per listed pair. It's either position or alternative trade, whichever hits first. I always say, and that is my personal conviction, that the first touch of the zone is the most profitable. That is why we need to focus on the first touch and have in mind that historical and now moment concept lies in the first touch concept. So first touch of the zone is the most profitable. Position trades are trend trades and alternative trades are counter trend trades. Breakout trades and scalp trade levels usually can be traded independently on any position. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. But as I say, only sometimes, okay? Pay attention to my Twitter updates. Scalp trades should be done at or very close to important support resistance levels. Those trades are calculated by historical levels and Camarilla. Add these levels to your own system and pay attention to trends, so you might find other trend-based entries if we miss a POC zone. And the term pips pool is the maximum available number of pips you could have got on recap entries. I not necessarily say that is how much we make, because that is the maximum available number of pips. I always repeat, and remember guys, that is the ultimate truth in Forex market. We can all trade the same system, but we will always get different results. Some people will close the trades earlier, some people like to scale out, some people like to add scale in, some people like to put their stops to break even, and so on and so on. There are literally thousands of different mindsets to actually govern the trade if it happens. So we are all responsible for our own money management and our own trading trade management. So before I show you past week results, let me tell you that every week we have more people here, and I wish really a huge welcome to newcomers who are for the first time here, and I hope, guys, that you will enjoy it. So past week results, 21st of, oh well, this is typo, it's 21st of November 2016. Okay, so this is indeed typo. I need to correct this. This was the result. Euro dollar was good for 110 pips. Pound dollar didn't qualify, but our trend was confirmed. Australian dollar was good for 60 pips. Euro yen was good for 130 pips. Oh, pound yen, well, pound yen, it was very, I will show you, it was very close to POC point, and I hope that you actually managed to get into pound yen, although it didn't touch the POC zone, but it was very short of our POC zone. So very shy of our POC zone, but still very good to trade. And pound yen was maximum 280 pip, even if you get a little bit higher than our POC zone is. But nevertheless, this was really a huge success to us, because market really was doing a favor to us, providing us with really huge amounts of pips. Okay, this was euro dollar. This vertical line represents the time of our webinar, and after, well, a day, actually we had our position initiated. It was a sell position. Do you remember, guys, how many times I told you for the previous week that I really am, and I really was very bearish on euro dollar. I mean, I was selling rallies, and again today, guys, I'm selling rallies, okay? And you can see also pound dollar. Pound dollar was also short on rally. I did a Forex Empire exclusive analysis today. I will show you. So yeah, bear with me. So euro dollar was 0.660 sell. The price came almost perfect to the pip within our POC zone, and it was rejected for a huge amounts of pips, hitting all our targets. I forgot to put breakout trade here, guys, because breakout sell was also good. And if you traded sell position, and if you added this, if you had added this breakout sell, you would have made more than 150 pips overall. Okay, so that is the deal with euro dollar. When you see alternative positional trade and breakout, you can take two positions. So this was our first position, and the second position was initiated as soon as euro dollar broke 1.0550. So overall combined, these two trades could have given you more than 150 pips. So I might say that euro dollar, maybe if we exclude pound yen, this was the trade of the week, definitely. But let's wait until I show you pound yen. Pound dollar, I said it was ranging, and I gave you a sell position at 25.40. Well, this POC zone actually was not hit because the price went to 25.11, 12, but then it actually dropped. Well, it happens sometimes. But today, well, we got a perfect rejection of the POC zone, and that was the analysis, I mean, that I made with Forex Empire, but it's different. I will show you that later. But still, you see the power of POC. The POC has not been reached until this point. But again, POC will usually prove to be a valid point for taking both long and short setups. But well, on our recap, during our recap and after that, our POC zone was not hit, so I don't count this trade as initiated. So it didn't qualify for an entry. Australian dollar was again good. Okay, you can see here. You can see that I was short around 74.20. Stop loss was 74.70. Well, we had a sell initiated here, and actually this was a winning trade. Even people who shorted it here could have won something. So you can see a lot of bearish movement in our POC zone. Euro yen, we had a buy position initiated. Well, 117.20 was buy, price went to 117.38. But guys, this was very, very obvious that we will have continuation. And here you see what happened. Well, very, very, very strong. And I also said, guys, watch for 4-hour close above 118. So even if you have missed this setup, if you had taken an entry on your own system after the 4-hour had closed above 118.00, then you could have made, again, good number of pips, really, 200 pips. And pound yen, as you can see, well, I said it didn't qualify for the first time. Why? Because I usually say the trade setup is valid for today, tomorrow, and sometimes the day after tomorrow. Well, see guys, here it was 23rd of November. Our session recap was 21st. So for some people, maybe you didn't take this setup. But well, if you traded it at the right place at the right time, you see what happened. Now, if you had taken your trade here at this point, again, guys, you would have been in profit. No matter what, you would have been in profit. But you needed to, actually for this entry, you would have really needed to be very patient. 1, 2, 3, 4, 5, 6, 7, 24 hours of waiting, but then profits. So guys, I might say that the trade of the week was definitely pound yen. Pound yen was the trade of the week. Total pips pool plus 580. And really, I'm very satisfied with price results and with these setups that Camarilla McD and that I have been providing you with. So once more, pound yen, the trade of the week. POC zone worked perfectly. Obviously, this was for patient people who actually waited for the trade to develop. And if you had entered here, well, then you could have experienced a huge boost in your profits after this candle has broken. This is actually, guys, one of great patterns to trade. It's called inside bar. You see, this is inside bar. And inside bar is very strong if it has a momentum push. Because, guys, inside bar is what you should be really paying attention to if you're price action traders. And the only thing when inside bar will not give you immediate push is when it lacks momentum. This is also, guys, here inside bar, you see. Also here, all inside bars, you see, but it lacks momentum. There is no momentum to push it. Here, it was within our POC zone, and this candle, that was the first Marubozu candle, that was the sign for the three white soldiers to march in the north direction and exploiting even continuation of the trade setup. So pound yen, the trade of the week, giving us 280 pips of profit. This week, this is what I see. I would sell again. I mean, I don't know how many times I will be accurate with this analysis, because I really, guys, from time to time, we really need to have some losses, right? I mean, at least during my trading career, I have learned to respect losses and to actually treat losses as a natural part of my trading. But really, when you see that there are no losses, then you need to be a little bit suspicious when you start asking yourself, how come is that we don't have any losses? I mean, when will that equilibrium completely take over and we will maybe experience the streak of losses? Well, at least it doesn't happen now. Really, I don't know. I mean, for me, euro dollar is still sell. 1.0670, 1.0720. This is, guys, the setup, because we also have important news this week. We will have ADP, we will have NFP. Dollar is still going strong. Euro dollar is very uncertain. We still have a strong USD data. Also, guys, don't forget that we will have Italian referendum soon that can wait on euro dollar. And if you read my analysis today, I will show you, I mean, nothing has changed since today. The analysis is still valid. It's still fresh, you see. This was my analysis, and I was very specific here. Oh, I forgot to put my watermark here, but yeah, you know that this is my analysis. So you see, with all eyes firmly on the OPEC meeting this week to see if they cut oil production and raise oil price, other key items this week affecting dollar is advanced GDP, consumer confidence, NFP, and employment rate. The European Union reports its inflation numbers this week, a key concern for the ECB and Draghi, who also speaks again. Euro weakness may gain some traction as Italy holds its constitutional referendum. A no vote win, this is important, guys. A no vote win could lead to Renzi resigning, political instability in Italy, and snap elections sooner rather than later. Also, bad debts held by Italian banks stand near, you see, 360 billion euros. And a no vote along with political instability may lead to further pressures on Italian banks' ability to remain solvent and ensure the European Union banking system is sound. That is my fundamental review of possible euro-dollar movement. And really, guys, if you take a look at technical charts, I mean, I see that this could be inverted head and shoulders if it rejects from this region and goes up. But nevertheless, guys, you see POC zone is still resisted very, very fine, because we have a confluence of resistance there. We have trend line. You see this descending trend line. We have H4. We also have 56.1.8 retracement. This retracement trend line has been broken. This retracement trend line now is resisting, but it can also break. So guys, pay attention to possible sell again. And the only thing where I would say maybe this will actually be inverted head and shoulders if I see a rounded bottom here, and this is, guys, this is bearish, very bearish. So this neckline needs to be broken. Maybe above this point will be chance for euro dollar to go up. Definitely if we have a strong candle here above this confluence. This is X cross. Okay, this is X cross. So euro dollar bearish for me, and that is what I see. I see really again sell on euro dollar, and let's see if we will have anything more to add. Breakout sell is 1.0550, TP 0510. I mean, everything has been explained, but well, here you will see that again. This is 1 hour chart, this is 4 hour chart. Trust pullback, trust pullback, trust pullback, trust pullback, trust. Now we have a, this is pullback, now we have a trust. Again, it's dropping, and yeah. POC, Jackie T is asking, what does POC stand for? POC is point of confluence, Jackie. That is where we place our trades. Whenever you see POC zone, POC point in my analysis, have in mind that this is where you should be looking for trading opportunities. POC zone or POC point is the most significant point of historical buyers and sellers versus now modern buyers and sellers, and technical tools that can be found on any time frame. So POC zone, let's cut it to the chase. POC zone is the zone where we expect the price to bounce or reject, or let's say in short where we place our trades at. Stop loss for breakout sell is obviously above last 1 hour high. I don't know what will be last 1 hour high if 0.550 breaks, but if it breaks, your stop loss should be above 1 hour high. Okay, so that is euro dollar. Thomas is asking, can we see what happened with dollar CAD because why X cross is not working? Can you tell me, Thomas, which dollar CAD? I mean, I'm not sure. We didn't have dollar CAD analysis. This is what we had for the previous week, but I will show, of course, later during webinar. Just guys, we have more than 100 people now on this webinar listening to me, so please ask questions, but I will reply to you when I finish this part of the webinar where I show you setups. Okay, so pound dollar, you see pound dollar is ranging. This was for the previous week. For this week, it's still ranging, but I will probably try to sell around 24.60. That will be my sell spot, unless you're already short after my analysis. 24.95 is stop loss, 23.50 is TP. Breakout sell 23.60, 23 TP. Alternative buy 22.60, 22.30, 23.00 TP. Now why, some people might ask, why Nenad, why are you short on pound dollar? Guys, again, I told you that on Mondays you should watch for my Forex Empire also analysis. Okay? You should also watch for my Forex Empire analysis. That is the website that we also provide the analysis to. And today I will show you, I did the analysis, and here, let me, pound dollar month-end flows have the strong impact on the British pound. This is my article today. And I was clear, the pound dollar is going up strengthened by the good autumn forecast statement and second estimate GDP. Additionally, and so on and so on. But this is important. Before I did the analysis, I saw a huge drop on pound dollar. And what happened is actually, we know that Bundesbank or BUBA has been buying Euro GBP around month ends. So guys, mark Euro GBP on your chart and watch for month end flows on Euro GBP. If you see that Euro GBP is going up, that probably means a sort of intervention or buying from Bundesbank into the market that actually add to pound month-end flows. If euro GBP is going up, pound dollar will go down. That is counter correlation between euro GBP and pound dollar. Then what you need to do, you need to apply that fundamental knowledge on your charts. And then guys, I just calculated what would have happened. And I will show you. You see, I don't know why then don't make this more prominent and more clear, because I really, you see, I need to zoom in. So at the time I did the analysis, price was here. Okay, this really is not looking good. I need to find my own chart that I submitted. Just give me a second, guys. I will show you with much better resolution here. Okay, let me see where okay, here it is. You see it now. So at the time, while I was writing the article, at that particular time, the price was 23.90. Okay, it was 23.90, right? And then after I finished with the analysis and when it was uploaded, the price actually went a little bit higher just to reject 22.30. See? 24.30, sorry. So you see, guys, you could have made pips even on this analysis. And here you see it was rejected a couple of times. I was very clear, fundamental reasoning here and definitely technical reasoning. See here. So in my opinion, pound dollar is still sell on rallies, and pay attention basically to these two POC zones. The first POC zone gave us 20-25 pips after I published the analysis, but it is still valid because it's actually a double top. So pay attention to POC zone and also pay attention to POC2 zone, and this is exactly shown here. 24.60 sell, 24.95 stop, 23.50 TP breakout sell, 23.60 TP 23.00. Alternative buy 22.60, stop loss 22.30, and TP is 23.00. So sell position 24.60 here. Again, I mean, I don't need an additional explanation, except guys that you can read the full price analysis at forexempire.com. I mean, everything is the same. I haven't changed anything. Australian dollar is ranging. Sell 75.30 with stop 75.60, target 73.80, and buy position 73.80, stop 73.50, TP is 75.00. So here you see Australian dollar, and as I say, Australian dollar was very, very, very good to trade. Although guys, you see ATR for the last 7 days it's 67 pips. I mean, it's poor really compared to, let's say, pound yen that has 206. Now you see why I prefer pound yen over other pairs. Euro dollar not that bad, but still not that good. But I mean, I usually use 14 ATR here, but just for the showcase, I mean, you can see it's very poor, 60 pips ranging. I don't really like to trade pairs that are heavily ranging, that they do not have ATR, but I know that some people prefer to trade Australian dollar, and especially because it's a hard commodity currency. It's linked to gold, it's linked to iron ore, to copper, so people who trade equities, who trade metals, also prefer to trade Australian dollar, USD, and of course ASX 200 index that can be traded successfully during Tokyo session. So this is what I see. I will explain the reasoning behind it. 75.30 is sell position here. I mean, guys, if you open 4-hour time frame, you see double top. But let's say that this double top might break. We need to find order block. This is bearish order block here, but also a host of bearish order blocks here. You see how many order blocks? 1, 2, we can say this is order block 3. Although these candles are bearish, we see 2 or 3 bullish order block, bullish candles that resemble bearish order block. So you might ask, what is order block? I assume that you don't know what it is. The low of the bullish candle prior to the move down is called bearish order block. So if this is bullish candle, and it is, and this is bullish candle, and this is also bullish candle, so the low of bullish candle prior to move down is called bearish order block. Bearish order block. Conversely, this is, let me see, this is bullish order block here. The height of a bearish candle prior to move up is called bullish order block. So this is, guys, bullish order block here. It's usually found near, it's usually found in uptrend, and bearish order block should be found in downtrend. Okay, so you see, guys, here, if the price is to continue to go up, this, you need to look to your left, and to your left you will see order blocks. If you want to sell, you need to find bearish order block. So you see, this is bearish order block, host of bearish order blocks. Let's say you want to go up, the price is here, so you know that this is now a bullish order block. You see what happens? It's very strong confluence point, guys, and you will always find it in my analysis. So bullish order block is here, price was rejecting, triple pin bar rejection here, and you see what I say, wicks are more important than bodies, and you see wicks here, more important than bodies, guys, because wicks tell you about now moment versus historical moment price action. So that is why I always say, pay attention, really pay attention to those important things that are making the difference in your own analysis. When you're a master of price action, it will be very, very easy for you to spot it too. But that is why I've been teaching you also with price action training school. Okay. Next is Euro Yen. 118.10 is positional buy trade. Stop loss is 117.70. TP is 119.00. Sell position 119.45. Stop loss 119.70. And 119.00 is TP. Okay, just let me reply. How can I get pivot points? Send me an email request. Okay, and I will send it to you. Okay. So Euro Yen is 118.10, buy position 117.70, and so on. So let's see Euro Yen. Uptrend, right? So for this sort of uptrend, I would like to see a bit more pullback, because now it looks like it might go down, right? So let's find a more of a pullback. So somewhere around this region, 118.10. Order block here, although not a perfect order block, the height of this bearish candle, but we actually see two, it's like a double top, mini double top. So I assume that we have an order block here. Also, this is L4, weekly pivot point. By the time the price gets there, the CMA would have already probably come to this point here. So I think that, well, Euro Yen looks good for a potential swing to the upside. Even if it wants to go more to the downside, I expect the price to bounce at this spot. So if you see good pips on this trade, protect your trade, scale out, or put your stop loss to break even, and you will be fine. So this can be a good spot to go long. And I would sell around 119.45 because really, guys, this is now also like an order block here, but it's actually a breakout point. See, a breakout point retest. So breakout, retest, and probable continuation. So I really expect Euro Yen to go down more and possibly be bought from this spot. And finally, the last setup for this week is Pound Yen. 138.75. TP is 140. I may be a little bit short on stop loss, but really, I mean, we can expand the stop loss, but I don't know, this is really a level, strong level. So add 5 pips below the stop loss, always. Yes, you will see, I will answer questions just after I finish with this. So 138.75 Pound Yen. 138.75. So possible longs from this spot. See? Bullish order blocks here. We have a double top bullish order block. And if we put Fibonacci here, see, it's 61.8, guys. So it's rejecting, but on next drop it could probably go up. Euro Yen, okay, let me first answer Nathan's question about Euro Yen, and then I will go through your question, guys. Nenad, regarding Euro Yen, I thought that the zone between H4 and H3 is no trade zone. Please explain. Okay, sure. Euro Yen. Well, this is L3 and H3, right? But if the price drops here, okay, this is trading zone, Nathan. You know, there are different approaches to Camarilla indicator. Traditional Camarilla is telling us that the price is usually trapped between L3 and H3. How I personally use Camarilla is that I define zones also by using pivot points. When L3 is tested like this, it's still support. If it drops here, it is support, right? But L3 will become resistance. Same if it gets to L5 and it starts to retrace. You can treat L4 and L3 as resistance. Understand? Please understand this concept. If it breaks through L4, we expect a breakout to L5. But then we can see if this has enough confluence to be valid for POC, because if it hits L5, this will become resistance. Okay? So H3 and H4 now at this point, it doesn't show anything, Nathan. You still need to see price going up, breaking H3, hitting H4. Then H3 will become support. If we see 1 hour momentum or 4 hour close above H4, we can assume that the price will reach H5. But that is why I prefer to see 4 hour close above this spot in order to see H5. Same for shorts. If we see 4 hour close below L4, the price should go here. So I hope that this is clear. Now let's see your questions. Thomas is asking, can we see what happens with dollar CAD? Why X cross is not working? Dollar CAD. Still you need to tell me which kind of X cross, where, what time frame. Thomas is asking, hello Nenad, I just watched your episode about T89 pattern. If you have time, could you explain it, as you didn't mention on the video how it works? Guys, yes, I will do that, but don't forget that you can see price action training school here. So guys, watch this. It's price action training school. Go to Admiral Markets, price action training school channel, and here you will see a lot of videos. I mean, this is price action training school, and go through this. You will find explanation for our, this is the address. So okay, use it guys to your own convenience here. I already explained that here, but no problem, I will explain this, of course. Okay, what is this now? No problem. So pound yen, okay, this is what we see here. Dollar CAD, yeah, pound yen I will explain later. I already showed the screenshot, but for dollar CAD I don't know which time frame, so I will try to see during the webinar. Next question, is this webinar recorded and will it be uploaded on YouTube? Yes. What is your opinion on this rally in US indices, S&P and Dow? Shouldn't race influence them to the downside? Yes, Dado, but as you have already read in articles that Chris and I did, this is strength of dollar after Trump has won the elections. And you know that indices are usually counter-traded by Forex except for yen pairs, because yen is safe haven, and when Japanese trade they tend to repatriate back to their country, so yen is heavily correlated with equities. Okay, so usually indices, equities, stock markets are going counter in the opposite way to dollar. You also have a webinar that will explain intermarket correlation, so you might refer to that webinar for a deeper explanation. Kusuik is asking me for dollar yen. Dollar yen is buy on dips, also buy on dips. You see there is a lot of support here. We can make a trend line here. This was obviously a fake out here, and you see how it's respected, so buy on dips, but also watch for possible sell within this zone here. If it breaks this, it should go higher, but dollar yen is buy on dips. How will OPEC affect CAD pairs? Please also check CAD yen. Well, you know that CAD is linked to oil. We still need to see what the decision will be. Now the agreement, if we see an agreement, it will probably affect oil in a positive way, but at this time you need to know that CAD yen is to the upside. Okay, you see CAD yen is going up, oil up, CAD yen up, so here you see you have an order block here, possibly buy. If it gets into this zone, this could be a buy trade. So yes, CAD yen for me is looking as a buy. Keju is asking for AUD yen and New Zealand yen analysis. Sure. Australian dollar yen. It's a bit tricky because Australian dollar yen will probably move during Asian session. Hang Seng index, you will see Hang Seng index on your charts. It's really a huge mover, and also AUD yen moves a lot. Especially guys, watch Nikkei with correlation with AUD yen. For AUD yen, I might say that the direction is still undecided because it needs a clear 4-hour close above this high to go up, and it needs a clear 4-hour close below this, and I would say 83, better 83, to go lower. So here guys, very unclear. For AUD yen, this looks like inverted head and shoulders shaping up, because you see this is like left shoulder, then V-shaped reversal head, and if it gets here, this could be a rejection and inverted head and shoulders. So I would pay attention to a possible inverted head and shoulders. Ron is saying newbies must follow paths is great. Thank you, Ron. Yes, indeed. This is what Ron is saying. Thank you. Okay, let's go more. Australian dollar, yes, Australian dollar, I will roll the slides. Ilya also, yes. Euro New Zealand, let's see Euro New Zealand. Okay guys, Euro New Zealand, a little bit rangy guys. This is a little bit rangy, although we have a sort of bearish pennant here. Roughly this is bearish pennant, you see, and the price broke through this. This could be a sell. This could be a sell. I think that this is a probable retest shaping up. This is, you see, a pennant. This is pole. This is, see, it's like a pennant definitely, and here it broke through this trend line. It could be a retest and continuation to the downside. Australian dollar New Zealand. Australian dollar New Zealand, buy on dips guys. You cannot go wrong if you compare two economies, Australia and New Zealand. New Zealand is purely meat and dairy products. Australian dollar, Australia is stronger economy than New Zealand. So whenever you see a big dip, buy into dip. Okay, always buy into dips. If it gets here, buy into dips. So if it gets there, buy into dips. For 4-hour time frame, inverted head and shoulders, possibly here. You see this region here. So this could be a buy into dip. I mean, that's it. Fundamentally, it's buy into dip, but you need to technically assume where the dip could be. So here, this is left shoulder, mini left head, and it could go up, although if it proceeds up, and if it, let's say, if it breaks through this trend line here, closes above retest, this could go more to the upside. So buy on dip, definitely. Gold. Bearish price action with a slight of retracement. This looks like a flag here. Okay, this looks like a flag. So, well, this doesn't look anything particularly. I mean, this, you see, this is fake out here, fake out here. So it's like a flag with the potential of the breakout. but at this point it looks like it could break a downside to the downside. So if it breaks here, watch for close below this, not close inside the flag, but outside. And then you will probably see a continuation to the downside. Pound yen here. Oh yeah, there is divergence here, but let's see if we will get a chance to get into our POC zone and actually, well, buy on dip. Okay. Now I will roll the slides. We still have time for more questions. If you have anything that I didn't answer. For indicators, guys, just send me an email and I will send the indicators to you. So this is euro dollar. Thomas is asking for the link. Sure, Thomas, I will show you the link and chart just after I finish with this. Pound dollar, Australian dollar. Euro yen. And pound yen. Okay, for this, let me see. Okay, I don't see. Okay, let's see again. Dollar CAD. This was breakout. I see. I see now. Okay, let's see. 25th. Okay, what was the time? 11:46. So yeah, this was the analysis you're asking for. Range play with a chance of breakout. It already happened. If you watched it, it already happened. It was a breakout, Thomas. I will show you. I know what you're asking for, and it happened. It gave you good pips if you traded it. 25th, we need to go back in time. 11:46. It was, I always move my time a little bit to stay ahead, so the analysis was somewhere here. So what happened is, see, breakout, and it could give you pips. It went maximum, let's see the article again, about 3505, we could see 3525, 3550. So according to average range, I calculated that dollar CAD could spike to these targets, and the first target was hit. So this was when I published the analysis. Couple of hours later, it was broken out, and it hit. It even make it to 35.33. So you see the target was hit here. So it did work. See, Thomas, it did work. And to the downside, it went down. You see, I actually posted a breakout setup here. X cross, X cross. So it works. You see, it works. But you should have been traded this one. Okay, so that was it, guys. I hope that you enjoyed the webinar. Thank you for listening. Yeah, one more question and we need to go. Euro Swissy, please. Okay. And Eric is asking, what is Camarilla? Camarilla is the indicator. This is the indicator that I use and that I base my trading analysis and method on. Also T89 is, I didn't reply to T89, but I said it many times before. T89 is a pin bar rejection of EMA 89. That is T89. Rejection, pin bar rejection of EMA 89. This is T89. See this one, strong pin bar rejection. That is T89. And Euro Swissy, I particularly don't like to analyze Euro Swissy a lot. You see, a lot of ups and downs, ups and downs. It's like it's really being a bit, not say manipulated, but you see the price is not that clear. Huge spikes to the upside, then rallies. So I don't have anything good to say about Euro Swissy trading. There are a lot of different pairs that are much better than Euro Swissy. At this point, it looks like it could reject from this spot. So thank you guys. I wish you a great day ahead and a great trading week. And I hope that we will have, yes, Euro SNB is definitely supported by SNB. They intervene. I wish you a great trading week ahead. Expect new analysis. And let's make money together, guys, as always. Cheers. Trade safe.